So Shavyfxhub, few hours from now, the market will be open. So let's share daily perspective on good. Now it is clear after our NFP report and employment data and unemployment data and so many other data that are coming up and the ones we've had. They're based on yesterday price action. On Friday, we already know where the market is headed. So it looks like gold will be under intense pressure. So let me look at the structure from technical perspective. On technical perspective, these are all RS level. Resistance becomes support and break of structure. And is an RT. So this is a typical break of structure. After break of structure, a broken supply roof becomes a demand floor. That was a critical example. And I'm going to make that my SR and also a demand floor. That's another critical example. Returning the same trend angle after break of structure. So your trading is technical, and everything in trading is not grammar. There are a whole lot of technicalities involved in trading. So that is why it is important to have your own strategy and you make sure you are getting a good result. Yeah, there's nothing wrong in copying someone's idea. Nothing wrong with that. If you aren't getting a good result, but if you are getting a good result, stick to what you're doing. This is a new demand flow. And the SR after breaker structure, price returns here as an SR and as well RT. Remember, doubles up as SR and as RT, doubles up as SR and RT, retest after breaker structure. And the same is applicable over here. Doubles up as RT and as SR after breaker structure. As a broken supply roof becomes a demand floor. We have it here as an RS. And pardon me for not have been using BO. BO is breaker structure. And we continue to maintain that trend angle until it is completely exhausted. So that's another structure. So this is one of our strategies in-house. It's been a long time strategy where you can use to, you know, play around the market effectively. This is a daily candle. All analysis here are all daily. And here becomes your, after that long travel in structure, price returns here freely. Trading is very simple, but it all depends on your approach, your strategy. Some people have made it compulsory that they will make it hard for others. So, in order to achieve that, they come along with all forms of grammar, and I tell you, it becomes very difficult for you to comprehend. Look at us. Look at the way this thing is playing out. That even a small baby in nursery school can be able to do this with explanation of demand and supply. With a simple explanation of demand and supply, break of structure and retest. Three things, just what you need in trade. So it's either you're a long-term trader or a short-term trader. If you're a day-to-day trader, then this strategy is what you need. You focus on demand and supply since you are looking out for 50, 60 pip for the day and you go home, except you're a long-term trader. But the strategy I'm telling you, we give you everything you want as a small liquidity trader. This is the daily. So daily now makes it very clear so that everybody can understand clearly. On daily, you can see that descending trend line on daily, and you can see how price have touched into it. So what I think price might do is we are going to figure that out. Let me not put this thing. So let's stay on one line so that we get the picture on daily. This is an SRS resistance become support and break of structure. Resistance becomes support and break of structure on daily. And another resistance becomes support and break of structure. We have a breakout price returns here on retest. So what we see here might be a classic liquidity take, which from a line chart, I can see a couple of this position looks good. This position looks good on daily time frame. It's a nice daily cross. So what you might have is the market might try to pull back a little bit, maybe into 3,300 whole number, or the market might pull down into 3,200 and maybe 95, or maybe 90 extra 100 pip or 120 pip or 130 pip more on daily candle and reject. Because from what I've seen here, the market will need liquidity for uptick. So look at the structure on daily time frame. We have here as a support structure, and we have another support structure on daily time frame. Can see that structure? Yeah. So giving us an ascending trend line. I do like to change the color to make it very pronounced. Then we'll have a break of demand floor to SR level, break of to SR level, SR1, SR2, break followed by a retest sell, form a W structure, a reversal price action. And when market broke came here, retested it, returned aligned to the same ascending trend line. I will call it ATL. Trading is very simple, and three things is just all you need: demand and supply and break of structure. That is the three things you need. So every other thing you are looking for, you are just looking for trouble, and you will see it. Yes, I'm telling you for free. Three things is what you need. Forget about every other grammar. What you need to comfortably take trade on your own is three things: demand, supply, and break of structure. That is what you need. And they say price returns here forms another W structure, still keeping the market at elevation. And we have already broken out from this bearish impulse, a W structure breakout, putting here an ascending trend line. Of course, until we break below, then we'll not sell. So if we have a daily candle close below the structure, then I will evaluate price will come down here because this is a previous demand floor based on the old strategy we have. Then go back to retest it. Then we'll now land here. That is around 3,156. So on technical and on daily analysis, here becomes a new demand floor. Sometimes when we play with higher time frame, we need to also come down to lower time frame. So this is the box, anticipated box for demand on daily. Trading is very, very simple. And I tell you, three things is what you need: demand, supply, and break of structure. You need to see it. Then possibly look for the retest. If an SR level is broken, what are you looking for? When an SR level is broken, you are looking for an ROS. But before ROS, you need to see a retest. After retest, then you now see subsequent. And that's all you need, family. You don't need too much of grammar in the market. So technically, we're adopting one return angle, one move angle, one return angle. So here becomes your next demand flow based on the strategy of the market. Remember, the market set the pace that you follow. You don't dictate the pace the market will follow. You don't dictate the direction. The market has given us this trend angle, has given us this pattern. So what you are trading sometimes is pattern of movement. Instead of trying to predict how it will go, look at what it has done. Look at what I've done. What I've done is what the market wants to do. This is what you need to stick to. You don't need to change it. Now, to buttress my point, I align with the trend. Now, what am I looking for? So I want to see a daily trend line breakout. A daily trend line breakout further reinforces my sell potential. So if I see that happen on daily time frame, then I know that we have finally lost uh, all buy analysis. So at the moment, I want a daily close below the a daily close candle. So you see what we have here. The first one we have here is an RT. Sorry, this is not RT. This is an SR. As a daily SR support become resistance on breakout structure. So for me to sell on this, I'm looking for a breakout from the trend. So the moment I get a breakout from the trend, then I know what to do. And on this, I'm going to call it ATL, ascending trend line. That's what it is. So you have seen the way the structure played out, and we are back. And to also, you know, um, add more evidence into what we're doing, then you look from the roof, we see that we have series of supply on a daily time frame, the top of that M structure, and everything buys is telling you a buy. So if somebody is still telling you to sell, you have to think twice. So if you look at that structure, the roof of that M structure, price formed an M structure and have sold after that. We broke the structure, came back. After break of that demand floor, it became a supply roof and we sold. We returned, respected as a supply roof, we sold. We broke the structure, tap liquidity from the descending trend line connecting 3,500, 3,436, 37, and 3,365. And you have seen price return. And after break of that structure, we couldn't go back on daily. We had to return based on the structure before we broke out. So technically, the market has set here up for a buy. So, ladies and gentlemen, this is a wave of buy looking at you. We have a wave of buy from here. So you have two confirmation, ascending trend line and a descending trend line, telling you that you are up for a buy. So it is what it is, and don't let no one deceive you. The structure of the market never lies, and I'm telling you, at the end of today, there will be a final winner. The structure of the market never lies. So what I'm telling you is what the market has said. What the market has said is what I'm telling you. So if you look at this structure, you can see the chart pattern, and you have a breakout, and market has retest from the roof to continue upswing. So what we'll do is we will look at price reaction at 4,000, But till then, let's keep things simple the way it is like this. Because you can see the roof. Look at the roof here. Look at here. Here is a supply roof. Here's an RS level. Look at that RS level. Can you see it after breakout structure? When price broke came back, that level had price. Now, these two structure has given us the impetus to draw a descending trend line and hold firmly to it. Now, when price returned here, it rejected it. We broke the structure, came back, broke that demand floor, and sold on May 29, Thursday, right? Before we broke out. We broke out on Monday 02. So I want to be specific to that very daily price action. So this is the day, Monday 02. Now we broke out and we stayed on the roof in search of sell liquidity. And the market has played a smart one on us and ultimately came down at the demand floor. The market is sitting on demand floor. So the worst the market can do is to seek for daily buy liquidity. So in search of daily buy liquidity, look at what price has done here on daily time frame. Let's be specific. On April 22, the market can seek buy liquidity into 3,256 and buy back. This is a very strong case scenario. So when you are holding your buy, the only time you are going to give up a buy idea is by day close. So if the day closes, if you decide you don't want to trade tomorrow, it's okay. It's okay if you don't want to trade tomorrow. If you don't want to trade tomorrow, you are being risk cautious. You don't want to risk your equity. So if you don't want to do that, it's perfectly okay. But whatever that brings price on the selling side and price comes into this level, into 3,254, most likely you will have a bounce back. The market will reverse at that level. The reason is because there is a strong price action at this level, an ROS level turned SR level, giving you a strong ascending trend line, and is a clone of the bottom structure which we brought. All of them are all at the same trend angle. They are all the same trend angle. So if price, now look at what price has done here after breakout structure, market sold before breaking the structure, and the area has not been tested. So that keeps 3,255 into 2,350 as a demand floor. So in a worst case scenario, the market insists on opening bearish, market could come here to seek liquidity, and a closer into this might approach the ascending trend line ATL and reverse on daily. Look at what market has done. So it is possible that you could have a daily rejection, rejecting over 80% of the bearish drop. So market might come here to collect everybody's stop loss. It will collect everybody's stop loss or align with those who have a sell objective and at the end take their money out because of what? A breakout from the descending trend line. The breakout from the descending trend line has two confluence. In fact, it's three confluence, not two. It's three confluence: a descending trend line, another descending trend line, and another ascending trend line, ATL. So this is my bias using market structure, and based on what we've seen, the dollar index has picked up, and and we see the 10-year bond yield climb after we had a very strong favorable data print on Friday in favor of USD. The bond yield market has appreciated, and as for the dollar index, showing very strong resilience. So we could be on that fundamental, still factor sell. So what it means is that if the market upswings, this area is a potential sell area, somewhere around 58. The market may be looking at 58 for a potential sell. 58 into 60. The market might swing into that zone and start to draw you back. So these are case scenarios, and we need to stay cautious on this, and I hope that this comes as predicted.